What is up, DGens, gamers? Welcome to another episode of the Solana Circuit number 29. Can you believe it, David? We're almost at 30, which means we will be old in boomer status.
I mean, listen, I am personally 30, so as long as we're still under that number, I'm going to consider us still pretty young. We're still doing all right, here.
Nah,
But
you're young
but
status. It's over for you, brother.
I'm actually technically legitimately young status, and yes, niece and nephew, I love them. No, you cannot see them. I refuse to post pictures of my relatives on the internet. But yeah, man, I'm just getting back from vacation and happy to be back. It's great. How
You
are you
went
doing,
to
brother?
you went to a couple conferences, right? Were any of them crypto conferences?
No, no crypto conferences. I was there. I was out in like the Bay Area in San Francisco, Berkeley area, and this was for I don't know if any of the audience will know that this is, but for Less Online, which is a conference about like Less Wrong, which is a blogging website. A bunch of EA, effective altruists, rationalists, kind of slightly odd people, but they can be kind of fun, and some associated stuff after that. So, but yeah, glad to be back. Glad to be back. How are you doing, brother?
I'm doing great. I actually also just got back from vacation from a cruise. I went on one of the biggest cruises they have out there, and it was a good time. I spent most of it just chasing my toddler around the ship. So still kind of recovering from vacation. Feel like I need a vacation from the vacation, but it was good, and I'm happy to be back to being locked in.
For sure, for sure. But today we have Mary Gooneratne. Am I pronouncing this correctly, Mary?
That was a great attempt. I think you get a 9 out of 10 for that.
Okay, okay. We'll take it. We'll take it. Thank you,
I
thank you.
would say that's high on average.
Fantastic. Well, welcome to Solana Circuit. We're happy to have you on. You're from Loopscale. Do you want to tell us a little bit about yourself and a little bit about Loopscale?
Yeah, for sure. I'm excited to be on the show, so thanks for having me. But yeah, as you mentioned, I'm one of the co-founders of Loopscale, and we are a order book based borrow lend protocol on Solana. So our focus is on supporting kind of new types of credit products and new types of credit markets that weren't previously possible in DeFi. And so kind of have a focus on kind of the longer tail of assets or RWAs or things that have kind of more unique constraints or requirements. And as for myself, we started kind of what was originally known as Bridge Split, but is now Loopscale back in 2021 with my co-founder and kind of during that whole Solana craze, and had kind of a number of different journeys and learnings that led us to ultimately launching Loopscale last year. And it's been kind of a wild ride since and been super exciting. Just time of growth for us.
Awesome. You said you've been around since like 2021. I mean, I that's pretty early days in Solana. It's I know I was also building something around that time, and then a whole different set of challenges at that time than compared to these days. Where I mean, if we're being honest, if you've been developing on Solana since then, like it's kind of a lot easier to write code at this point, uh, compared to when there were only 75 developers and everybody was chewing glass, and that was kind of the thing happening. Um,
Yeah, I feel like I don't know if this is like a new sentiment. I feel like I've heard variants of this, but I do think there was something interesting that happened for like Solana's growth and branding as a function of it being this like chew glass. Like no one wanted to be on like the easy like platform to build on. It was like cooler to be a Rust developer and building on Solana. And so there was like a slightly self-driven aspect, I feel like, of the developer growth that is cool. I feel like there used to, what was the Paul DevX? I feel, is that do you remember the original Solana tutorial? I feel like people bring it up from time and time in terms of like, were you around when that was like the only developer tutorial for Solana? And it was like how to build like an escrow account or something like that.
Oh man, like that is actually really nostalgic because I was like, I'd completely forgotten about that. The main thing I remember from that time is just PDA, like program derived account permission checks, and just the nightmare that that was before like Anchor came out and was released. Like
Yeah.
because that used to be something you had to do completely manually, and there were a million ways you could just shoot yourself in the foot.
Yeah, and I don't like code quite. My co-founder does more. It does don't code quite as much as I did, obviously, when we first started. So I'm definitely kind of absent to how much easier it's gotten relative to then. But it was definitely a learning curve back in 2021.
So you've been building on Solana since 2021. Were you involved in crypto before that, or was Solana kind of like your first kind of dive into crypto in 2021?
Yeah, so we actually, I'm trying to remember the exact timeline here, but we were kind of building in crypto and kind of were more excited actually originally about like a fintech kind of trading idea that we had had. And we're exploring different ways to implement that. And that was kind of how we discovered crypto. It just felt like the easiest way to accomplish what we wanted. And so started exploring kind of how to build that out and had started on ETH. And then at the time, we were kind of just like fresh out of college, did not have $1,000 for every time we wanted to deploy a contract or test something. And so we're like, all right, we need to find some other way to do this. And so we started playing around actually on the Polygon testnet. I think this was early 2021. And then we were thinking, okay, this is probably the route we're going to do. I think we entered like that hackathon or something. I just remember we entered a hackathon and like Stani was our judge or something. And we were like, just like, oh my God. And then in kind of, I think May of that year, where there was the Bitcoin 2021 conference, which was like the big first conference after COVID, we met super randomly. Like my co-founder was like, I met these two guys on Telegram. They think we should like go hang out with them, which turned out to be Edgar from what was then like MarginFi and Barrett from like Ranger Cipher. And so those were like the first two people we met on Solana, and they had just like dyed a stripe in their hair. I think Barrett had just gotten his ticker tattooed on his leg. And for whatever reason, we decided to listen to them when they told us that Solana was the best place to be building on. And if those were our problems, we should try Solana. And I think we haven't really looked back since. I think there is a moment for everyone after they use or build on Solana for the first time where it feels like a no-brainer.
Yeah, I think there's this thing that like obviously like we talk with a bunch of people in the ecosystem and everything, but it's like there is really no going back. Like once you come to Solana, you're like, oh, this just like sure. Especially back in the day, it was difficult to write code. It was difficult to kind of like deploy and everything. But once you kind of experience just that it works and it feels very much like Web two, it's just like, yeah, why would I not be here? Like this is like obviously. And then the
Yeah.
community, the support, like sort of the move fast, break things, but you know, just the kind of the relentless like competition where it's all very product focused is like to me is it's a little bit like intoxicating, I guess, where it's like I don't want to be somewhere where things aren't happening or happen slowly or happen by committee or you know, it's just like I want to be where the action is. And for the past few years, I felt like that's been Solana. I mean, it sounds like you kind of feel the same.
Yeah, it's definitely, and I feel like whenever I go to events or something and I'm talking to founders that are building on other chains, it feels like that's always like something that's top of mind to them of like, what other chains should I build on? Or like, we're thinking about moving chains. And I just feel like when you go to a Solana event, that's like, just it stops being something that you're like actively thinking about and trying to solve for, which I think we take for granted. But it's like I can't imagine having to evaluate like the entire underlying like platform for your business as like an ongoing thing. And granted, there's like obviously different trade-offs between liquidity and users. But at least back then, it felt like the most important and the hardest thing was solved on Solana, and those other things were actually just downstream of that.
Yeah, 100%. I mean, even Solana's culture is just it's just incredible. Like just going to the conferences, Breakpoint, Accelerate, like the production quality of those events and like the quality of people that go to those events and the side events, like it's incredible. Like the most notable one, or even just a side event, the MoonPay event in Abu Dhabi that was like at the Louvre. Like what that's absolutely
I
insane. What a
didn't
crazy
end up
venue.
going there. I did feel like the side events at Abu Dhabi this year were like just way better than, I mean, they were just like kind of oriented around like doing things versus just like standing around and talking, which one I think is better for bonding. And then two, it's also just like way more fun. Like there were all sorts of just like very activity oriented events, especially with all of like the go-kart racing stuff.
Yeah, I know Double Zero hosted a go-kart event, which I unfortunately did not go to, but the pictures look great.
I was racing in that event. I think I got close to last. I think there was two in the race, and that was the only person I placed above. I think I was like 16th place or something. It was tough.
Yeah, we did go-karting at Raikou as well for an offsite, and there was a guy on our team that he didn't tell anyone he's like a professional go-karter, and he was like 7 laps ahead of everyone else. It was completely unfair.
Who was
So
this? Is this the person? Because I feel like the last 2 times there have been Solana conferences with go-kart races, there's been this random person that's like literally a professional racer. And it's just like, who are you and why? Like, you're just like, this isn't even fun if you're going to be like 9 laps ahead of me.
yeah, they need to be barred from the go-kart events, permanently banned.
Yes,
They
from a
they
retail, they're institutional go-karting.
This is what we
um,
meant when we said the institutions are coming. We don't want the F1 people in Solana. Well, maybe we do. I don't want to race the F1 people in Solana if that's some kind of crossover. I don't know. I don't know.
but they can buy my bags.
Oh, for sure.
They could buy my bags. Go ahead, but I won't race against you. I'm good.
Exactly.
Well, much fun as it is to talk about racing and go-karts, I would love to talk about Loopscale a little bit. So can you kind of tell us like what Loopscale is for the listeners, for the people who are kind of tuning in? What is Loopscale? What made you want to kind of build this thing? And I guess like yeah, tell us about what you're working on and why it matters.
Yes, sweet. So kind of just started a more high level before drilling into kind of why it's a little different or what prompted it. So basically the goal of Loopscale is to allow on one side borrowers to use their digital assets or tokenized real world assets to borrow money over collateralized, or kind of more broadly to borrow capital. And our goal is at some point kind of the nature of on-chain credit isn't necessarily over collateralized loans. And then on the other side, you are kind of connecting them to lenders or those who are seeking passive yield opportunities, to be able to lend against those assets and lend to those borrowers and earn yield. And kind of there is this third kind of user that we do work closely with, and that is kind of a critical part of the ecosystem. But a lot of what we do is in the interest of folks issuing assets and trying to grow assets on Solana. And kind of the core aspect or kind of core obstacles to growing an asset on Solana is making it useful and composable with the rest of the ecosystem. And so for us, being able to enable a suite of both utility and yield for different types of assets, and as a function, grow those assets on chain, is kind of what we view as the glue that ties like this lender and borrower ecosystem together. And so for us, you can understand a little bit more about the platform, honestly, by talking about kind of the motivation to building it and how we got here. And so this was around like 2023 or so, we were actually building something focused on RWA lending exclusively. And so our motivation at the time was that a lot of the existing DeFi platforms, whether that was for trading or for lending, we're very focused on like a very specific subset of assets, and more specifically digital assets. And those are assets that you could liquidate immediately, get sub-second pricing, were completely permissionless. And myself and my co-founder have always believed in this kind of more broader vision where we have on-chain finance replacing a lot of the legacy rails of traditional finance. And so it felt inevitable that there was going to need to be some kind of shift in the way on-chain finance works to be compatible with those trillions of dollars of assets in off-chain finance and traditional finance that would not be compatible with, like, say, an AMM for trading or a money market for lending. And those protocols were very effective in what they sought out to accomplish at the start of all of this and kind of the inception of blockchains and DeFi, which was, okay, we don't have a lot of users. We don't know what has product market fit. How can we basically abstract or kind of create these market functions with a limited user base and limited liquidity? And so a lot of the functions for pricing an asset or pricing a loan or a rate are very much like they're algorithmic, right? So you are basically abstracting and estimating based on a certain number of factors that is a subset of what a market really should take into account. And you don't have users setting prices in AMM because that would require users to pay more attention. And if you have fewer users and you're just trying to bootstrap users, like that doesn't really make sense. And so obviously with, like you can see with Aave, I don't even know how, I think they're like, what, $10 billion, $12 billion. I could be off by several $billion right now, but that model worked for that purpose, and I think it served and it still serves a very important role. But we view the next 5 to 10 years of on-chain finance looking like radically different from the past 5 years in on-chain finance today. And so we sought out to build something that was more flexible and more focused on what markets look like in traditional finance for credit, where you have a single lender and a single borrower who are setting terms, and you can do things like a fixed duration or a fixed rate loan, or have a payment schedule, or be able to KYC the borrower and reduce their rate, or allow under collateralized lending. And so in that process, we had effectively built an order book for lending and focused on a lot of different abstractions that kind of simplified it for kind of this use case of on-chain finance, but realized a lot of the problems we were solving kind of applied more broadly in DeFi at the time. And like all of those problems still affected users who were borrowing and lending against just pure crypto assets. And so that was kind of what led us to work on like Loopscale specifically. And that was kind of where our rebrand, and we had launched in closed beta in August of 24 with kind of, these set of abstractions that took that like RWA order book that was like borrower to lender and kept that scalable foundation, but layered on a few different primitives that made it feel more like this Aave experience of one-click deposit and like one-click borrow, and then launched that publicly in April of last year. And so happy to jump into obviously any specific details on the protocol itself, but I think that kind of explains our position and kind of how we got here.
Yeah, I mean, I would love to jump into details here in a minute, but I really like the way that you guys like that you're explaining the thought process behind this, because I completely agree. Where crypto has been like very much self-contained, where like a lot of the financial products and a lot of like DeFi as a whole is very much you can do crypto stuff with crypto things, right? And that's great as a proof of concept, like for the industry, I suppose. But we don't have an example, for example, of something like overnight FX swaps, or like lending swaps or anything like that, which is a huge part of the actual like volume that actually gets transacted in traditional finance, right? We don't have a lot of these like actual money market type things. Uh, and by actual money market, I mean like the actually like useful debt that things like investment banks and the people who are actually doing like trillions of dollars in volume a day or a week actually give a shit about. Um, it feels to me like we're kind of in this weird stage of like, okay, yeah, we have like this little self-contained ecosystem, which is DeFi, and you can borrow Bitcoin against Solana or USDC against Ethereum, or whatever it is you're trying to do. But at what point does it become useful to like the actual institutional players, to the people who are trying to do serious financial things? And at what point does crypto or the things that we're able to offer as an industry become an upgrade to the systems that are actually being like that they actually care about, like the thing that they actually want to do? At what point are we able to actually facilitate these things? And that does seem to sort of be missing, but we seem to be kind of in like a proof of concept sort of stage where it's like, okay, it works within crypto. Now the next step is sort of proving, okay, this like the systems we have can be expanded to these other places. And then there will be like this step of, okay, now we're starting to get like RWAs, like you were saying. Now we can maybe start moving to like actual money markets, or like debt markets on chain, where in a useful sort of manner. But it has been like a pretty long process that I think I'm glad that like there are people thinking about these sorts of things and trying to move in that direction, as opposed to just how like, hey, let's do something kind of goofy that's just like completely like crypto asset against crypto asset focused, although that is kind of an important step, just again for the proof of concept. But
Yeah, I appreciate your clarification on just like the usefulness of the credit, which, yeah, I don't want to say like some forms of credit are more important than others, but there's like nothing that breaks me more than like seeing a tweet saying like RWA looping is the best use case of like on-chain credit, like this is the killer product. When it's like, if you think it like the credit market is huge and like it exists as like this innate, like it enables like this velocity of money and people to take risks, and like the biggest credit markets are like mortgage it, like, and enabling these like real use cases, whether that's for businesses. And again, not that trading and financial use cases aren't real, but there is so much more to credit than enabling like trading leverage effectively. And for so many of the trading leverage use cases, I think even once you get to this mature state of on-chain finance and your cost of capital catches up to the off-chain cost of capital, I think a lot of these use cases that people view as like the killer use case don't even, like the economics don't even really check out. And so, yeah, like there is, and I do like strongly believe that lending, almost more so than so many other use cases, like truly has benefits to the off-chain alternate, because the way lending is priced is based on risk, and the way risk is managed in lending and the costs that occur in credit products are things like collateral management, things like ledgering, things that you can actually de-risk and improve the quality of as a function of using a shared ledger between all of the different kind of people that are managing like the title to the asset. And obviously there's a lot of different legal steps to get to the point where you can treat the blockchain as this like ledger of record. But we're getting close. I mean, like with products like Superstate and like the way they've implemented tokenized stocks, like we're definitely getting close to the world where like your on-chain credit product version is significantly de-risked and cheaper relative to the off-chain version. And again, there are plenty of hurdles still to come, but from like a pure technological basis on like what is possible, and where are you cutting costs and improving the product, I do think we're close.
Yeah. Well, I mean, if nothing else, like just setup on time is a form of risk for these sorts of transactions where, sure, Solana's not technically instant, but it might as well be, especially by comparison, where it's like, okay, instead of like T+1 or whatever, depending on which markets you're talking about, that's just 24 hours of like time risk that just doesn't exist if you can do this on chain. You know what I mean? And even that just
And it
makes a big
compounds so
difference.
quickly. Like if you're managing, if you think that this bucket of capital is like reserved for this over 24 hours, that just because of the nature of like cross margining and how leveraged a lot of these like institutions are and how many places kind of capital hits, I think those like time effects are understated in terms of how much it actually kind of impacts the flow of capital, as it compounds like across the system.
So I'm curious, you mentioned that Loopscale is more of an order book model versus like a traditional pool-based lender like Aave. How does that affect the user experience? Because I know you mentioned things like fixed rate lending, under collateralized lending, which have traditionally been pretty difficult problems to kind of hurdle around in DeFi, and a lot of projects haven't figured it out quite yet, at least in a permissionless manner. So for these institutions, are they just coming to Loopscale and depositing money permissionlessly, or is it more of a situation where you're kind of making a deal like you deposit this capital, we'll give you a fixed rate?
Yeah, that's a good question. So the original version of the product, when it was like RWA focused, was a super clunky experience. It worked for that kind of use case, but it was like a borrower put together like a list of collateral or like escrow a list of collateral, and then it worked a lot like NFT lending, and then you can put an offer on it and then it gets submitted, whatever. And kind of, I think one of our big learnings in with that original product, where we were really going after institutions directly, is I think to be an on-chain company that serves institutions, you actually need to build a really strong retail base and brand and liquidity base first. And so our kind of process in relaunching its Loop Scale focused on simplifying that and making sure we were serving retail like equally as well. And so kind of the core changes. So now instead of being this like one-to-one lender borrower model, how it works is like some kind of basic insights we had pulled from the DeFi user experience are one, like borrowers aren't used to waiting for capital. And so that needs to be instantaneous. So now the way it works is lenders set up limit orders. And so they are basically setting like collateral that you're willing to lend against, the rates and the dates, and then borrowers can go and like immediately just take those orders and fill the lender side of the market. And kind of, I think while you get like this infinite scalability with the order book model, like historically, one of the challenges in addition to the complexity has been the fragmentation of liquidity across these different markets. And so it's like, how do you bootstrap this quickly enough that it's interesting for retail? And there's not just like one order on the market where someone's locked up $1,000 to lend against one asset. And so that came in the idea of like, the way we have orders or in like this order book is that it's really like one huge multi-parameter order book. And when you're escrowing capital, you're actually setting like escrowing capital, you're setting multiple collateral assets it's eligible to lend against and rates for all those different assets. And when you're a borrower and you click collateral asset and a duration, you're seeing just like a filtered view of all of that liquidity. And so that way you can basically deploy to multiple markets at the same time. And then a few other like key things that we did that, again, they were very like thoughtfully done as layers on top of the order book, because I think a lot of the use cases that are relevant 1-2 years from now do require that like bilateral concept. But again, that's just like not something that's attractive to retail. But a few of them on the borrower side. One was this idea of auto refinancing loans. And so users in our closed beta did not like the idea of time-based liquidations, understandably, where after one day you just get liquidated regardless of price. So now after the end of the 1 day period, they auto refinance into another, they just roll over into another 1 day loan until you repay it back. And so it feels like this infinite duration loan for the everyday borrower. And then we also introduced the idea of loops, which just kind of contextualizes borrowing for retail. I think like, and now like I think around 70% of our borrowers comes from loops, but like DeFi strategies are, and this gets into kind of a newer product we launched, which is the earn vaults, but DeFi strategies are like complex and it's not always clear to someone that is new to DeFi or just not paying attention a lot of like, okay, what rates can I take advantage of or arbitrage to be able to make a yield on this asset? And so loops just are like a one-click borrow leverage product that it's really focused on the yield side, even though you are borrowing capital under the hood. And then kind of the biggest change we made to improve the simplicity of the platform was the introduction of lend vaults. And so they work a lot differently, I think, than the vaults that we're used to from like Morpho or others. But basically, it's just taking the structure of the advanced like lender limit order and saying that instead of them setting all these parameters, they're adding it to this order that a curator or like Loopscale is managing effectively and deciding those different assets and rates. So it's a one-click deposit from them. It still benefits from like the capital efficiency, but they're just leaving the parameterization to us. And so I think those three things between the auto refinancing, the vaults, and the loops helped kind of create this much more retail-friendly version of an order book.
It's really interesting because like essentially you're creating like an investment bank functionality, like from top to bottom, right? But like DeFi is all about like removing the intermediary, right? AKA kind of getting rid of the investment banks. But it turns out like we're kind of at the spot where, and for good reason, like most people don't actually know the different layers of what like JP Morgan or Citibank or you know, all these places do for good reason. Like because why would they need to or want to, right? But there is actually a lot of complexity that goes on under the hood where it's like, okay, when you deposit into your local bank or whatever, they're often like doing business with these big investment banks. And these big investment banks are doing things like FX swaps. They're doing overnight rate lending in different markets and like finding ways to make all this work where you just have this sort of stack that just gets abstracted away from the user as it should be. And then trying to recreate all of that in DeFi on chain in a way that is presentable and actually makes sense. It's like, that's a really tricky problem to solve, actually, because it's like, okay, how much
Yeah.
should the user actually know? Like, obviously, you want them to have complete control over this, but also you want to kind of guide them in the right direction so they're not accidentally doing something that's bad for them, or that they don't want to do, and also don't scare them away by giving them just all of this stuff that happens, in traditional finance, kind of behind the scenes. So yeah, it's a really interesting
Yeah.
problem. And I'm glad that there are people that are thinking about this, trying to tackle it, because
Balancing like, yeah, the needs of like you have, I feel like it's like a little bit of a spectrum between like institutional users to like power type or like whale users that do, I think, understand like more of the intricacies of position to like users that are mostly unfamiliar with a lot of the different concepts and but are still like deploying capital. And yeah, you do have like an obligation as a platform to like, regardless of how clear it is, if you understand it, it needs to be something that someone can use and not like, I guess, just like screw themselves over as a function of not knowing what to do. Because that's just like a lost user, lost capital, and just also for like sake of obligation for the industry. But it's definitely a challenge in balancing those two archetypes. I think there is, like to your point, like there is a shift towards like more passive users and passive capital. And I think that indicates like the broader trajectory of finance and why I've always been like a little confused with the like there is like an over consumerization and like consumer focus in crypto that to me has not always made a ton of sense because finance is something that is largely institutional and it is with reason because like consumers like finance is something that enables like your day-to-day life and it is something that happens in the background and it's not something that you want to be thinking about like every second of every day of like how your portfolio is allocated. And so that's like why people allocate or put money in their banks or allocate money to something like a wealth front. And so to me it seems like it ultimately like makes more sense to focus, and like the only people who will focus and do those things all day are a lot of times entities or like folks where that is like their business or their work. And so it seems like a lot of the focus should be more on like a B2B or like towards institutions, rather than, yeah, like there's been a huge consumer focus. And I think there's a world in which it's like you can't have one without the other because like you need the end consumer to have these stable coins to be willing to accept a mortgage from a bank in stable coins. And so I think there's a world in which I think the reason that's happening is people are just trying to attack like kind of both ends of the stick and meet in the middle, hopefully. But I do think that's like a general kind of trajectory that has kind of confused me about crypto or just kind of the different strategies teams take.
So you're saying we don't need another 100 consumer-facing wallets?
Yes, I might be saying that. Yeah, I feel like everyone has taken the like where the end goal state is being like the Robin Hood for crypto, but like I don't like there's only so many Robin Hoods that we need.
Yeah, like David and I talk about this on the stream all the time. Like it, the permissionless nature of crypto is great, where you can enable anybody to do anything with their finances, which is awesome, and we 100% encourage. But like when you're adding perps to something like Phantom Wallet, it's like giving a monkey an AK-47. It's like that meme picture. Most people
And
shouldn't be
better, yeah.
like most people shouldn't be trading perps. Like most people are going to lose money. I lose money trading perps, and it's like a lot of these financial tools, institutions mainly use them in TradFi for a reason, because the average person isn't going to get a ton of value from these super powerful tools that usually require a lot of capital to do anything with.
Yeah, I was talking to someone at a major like financial institution, and he was saying like their big focus is like they think people are moving away from like wealth managers and like are self-managing capital, like particularly Gen Z. And he pointed to like prediction markets and things like that and Robinhood. And to me, I was like, I just feel like that is a fully different category and like the psychology of Gen Z. And even thinking to myself is like people do allocate money to those things, but that is like the form of money that they don't view as finance necessarily. And this is less so of crypto, but just kind of more so I think, these different categories, and they view it more as like a entertainment category in their head of like, and this is true even for me, of like, I will, like, my personal capital, like, there's capital that I like self-deploy and do things, but I'm mentally always ready to lose it, and it's almost like more of like a fun thing for me. And then there's always capital that is passively managed by someone else, and I prefer it that way, and that is like a safer thing, and it is FDIC insured, and like, I'm going to continue to do that. And I think there is this misunderstanding of like the psychology between these like two buckets of money that people hold. And like, one is like finance money and like life enabling money, and one is like entertainment money.
Yeah, there's like this difference of uh like if you're living your life, or just like doing normal stuff, like, okay, I want to buy coffee, where's my paycheck going, like all this stuff, like that's one system. And then the other system is an activity, right? Like an activity that I'm participating in, and it might be for fun, it might be because I'm intend to become a trader, I'm trying to get, like, I mean, like whatever the reason is. um but I think the actual value of crypto is just making the former category better, where it's like, and Nate and I talk about this a lot, where it's like, if we're doing our jobs right, like building infrastructure in crypto, you should, like, you as the end user should not be able to really tell the difference between those two things, like whether I'm using crypto or whether I'm not. It shouldn't be like a different destination. It's more like the backend, where it's like nobody thinks about HTTPS or Cloudflare or like these backend sort of infrastructure. It's just like a thing that's baked in because it's the best way to accomplish the thing that you're trying to do, and it shouldn't be something that like you're actively thinking about as a different activity. And I think
Yeah.
that is like a mission statement almost that is missing from a lot of crypto. Where I think a lot of businesses in crypto think about themselves as a separate activity from like just finance, where it's like, hey, we're actually just a straight up upgrade, and we should be building as such.
Yeah, I do feel like a lot of the reason that that has happened is like you said, I don't think the end state for crypto is necessarily like all users managing all their capital, because I don't think people actually want that. I think it's just like a financial system in which like the cost of credit is cheaper for people, more people have access to credit, more people are making money, and capital is flowing more freely, and like the benefits of that are like, obviously it's harder to visualize, and I think that's what honestly makes working in crypto like challenging for folks, or because like the things you're trying to fix is like this under like invisible fabric of the system. But I think the reason we've indexed so much on like user controls everything is like this idea of decentralization as like an ethos was obviously it's incredibly critical for like how a blockchain functions, and like is important for like being able to enable like this global permissionless currency and movement of money. But that ethos is like relevant for like literally the L1. And I feel like it just bled into everything. And it's like users should own anything. There should be no one in charge of your money. And obviously, like, I do believe that users should have like more control over their capital and like the ability to profit more off of their capital than they do today. But I don't think that involves, again, yeah, this like fully self-managed portfolio. And again, I don't think most people want that. And I think it's a function of like kind of getting lines crossed around like decentralization is relevant for this reason versus decentralization for everything, like get rid of everyone in the middle.
So how would you say Loopscale is kind of working to get towards this world, this vision that you're describing? Like, where does Loopscale fit into the mix?
Yeah, so obviously like there are these like two pillars in finance. There's like trading and credit. And so right now, like you said, we're definitely very much still in this like crypto bubble. And I think there's, for us, the act of moving towards like a world in which these loans are something that are productive capital for different business. And so we were a lot like almost closer to this version with the RWA lending, right? Because we were working, like one of our first customers was like Baxis, and we were working with like whiskey funds who had never had like a phantom wallet before, and their cost of capital off chain was like 22 to 25%, just like egregious rates. Even though they had like assets with kind of a pretty more straightforward pricing than a lot of other types of assets. And so
Actually,
we
just for the audience's sake, 22 to 24% is insane, especially like when you're
Yeah,
talking like any
for
kind
a
of remotely
collateralized.
institutional thing. You should be looking at like ideally less than a third of that, depending on treasury rates and other things. But like, yeah, that's wild.
Yeah, it was like their access to financing in that industry is like super limited. And so it was like a very interesting use case of like, how do you build these wedges? And I think for us, with the product we are just launched, or maybe haven't launched quite yet, but we've definitely announced, so I'm not leaking too much, is our product with collector crypt and allowing kind of different both collector shops and individual trading card collectors to borrow against their trading cards, I think starts to move us in this direction. And I had a tweet when we kind of announced that around like one of the hardest challenges of moving into kind of more traditional credit products is there's not a lot of collateralized credit products off chain today. And like right now, crypto is like built around this collateralized lending. We have no sense of identity. The identity problem hasn't been fixed. And in terms of collateralized loans, you have like mortgages and like or in terms of credit, like your biggest chunks are like mortgages and auto loans in terms of things that face consumers. And those are just obviously huge markets that are like heavily government subsidized and have huge incumbents that you're already kind of up against a fence there. And so the kind of goal is to find these more niche markets that are still sizable and there are still consumers on the other end that are still collateralized lending. And so I think that's like one angle in terms of like how do you get from point A to point B, and it's like how do you get from this over collateralized like lending structure to the end state of like lending to a consumer that's never used crypto before. And then once you get there, then you can start being like, okay, those users are used to like signing legal agreements for lending. You can start doing under collateralized lending and kind of start to broaden the scope. And so the collectibles market is a pretty interesting example of that. Obviously, I'm like relatively disconnected from it because I haven't, like, it's definitely a new thing to me, just as like the whiskey trading was. Like, I don't even know if I had whiskey at that point before. But it's like a $200 billion market. It is growing every year, and there are assets that users hold that are custodied by a third party that you have a way to price. And I think that is like one example of the way you inch towards like the consumer angle. I think there's other approaches that different teams are taking around, like, again, being kind of more of this infrastructure layer, and you have this like DeFi mullet where you're like reaching the end consumers and like from a Web 2 app and they don't even know they're using Web 3. But I think that stuff is like slightly less interesting to me in terms of like, obviously it's interesting from like a liquidity distribution perspective, but I think in terms of accomplishing that end state of like, how do you get people like your mom and your dad to be borrowing capital from Onchain? I think it's more relevant to work like on some type of asset class or product that either there's sparse access to or it's expensive off chain, versus like trying to have this like passive earn product or let them borrow against their Bitcoin or whatever. Like just focusing on the credit use cases that aren't like exclusively like digital asset focused.
Yeah, great points. I would love to go back to a feature of Loopscale, which actually is very relevant to Raikou because we listed rkuSOL on Loopscale. Was it last week? No, it was the week before. Working in crypto, just your
Don't
timelines
worry.
get completely screwed up.
Days aren't real. Come on.
They're really not. They're really
It's
not.
crazy. Someone was talking about, I forget, like it was just, oh, this person can't come, like someone's cousin, because it's like their summer break. And I was like, just the idea of like a summer break and like there being seasons where like children are completely off just felt like a foreign world to me. Like I feel like the years kind of blend together at this point.
They really do, especially like you've been a founder for 5 years now of two different protocols. Like it's got to feel like you're just kind of in a stasis or something.
Yeah, honestly, I feel like I measure the eras. Like my semesters are like Excel or breakpoint to breakpoint, and like what happened between 2022 and 2023 breakpoint, and 2023 and 2024 breakpoint.
It's like between this product launch and this other protocol that I'm like blowing up, like that's some measure of time that I don't
Yeah,
know.
it's just in these different eras.
We're all still post FTX crash. in that era, I think.
Yeah.
Dude, don't remind me. I ran into Carolyn Ellison like in person.
Wait, when, where, how?
Really?
Like last weekend, or this past weekend at like the conference I was at. Yeah.
Oh, that kind of makes sense. I feel like she is part of that world.
Yeah. But I
That's
was like,
crazy that she's
I was
out
like,
there
oh,
just like going to
okay.
conferences and stuff. Like, didn't she like just get out of jail? You think she would like lay low for a bit?
I don't know. I think she was like kind of trying to stay like away from people generally. Anyways, I don't really actually want to talk about that, but you know, like it was just a funny thing.
Yeah, no,
That is
that is
crazy.
pretty crazy.
That is wild. Yeah, that's nuts. But besides Caroline Ellison and FTX, uh, could you explain a little bit more about yield loops and kind of what they activate for people who are holding rkuSOL in their wallets and they want to kind of put it to work? Like, what does looping rkuSOL on Loopscale actually activate for these holders?
Yeah, so LC loops are kind of my favorite type of loop just because they are, I guess, definitely lower on the risk spectrum. But basically, I kind of touched into kind of how loops work earlier, but I don't feel like I gave a full explanation. But basically, the goal of a yield loop is you are taking a yielding asset. And so say you have $100 of rkuSOL and you're earning 8%, and you want to basically earn that yield on 4 times that. And so being able to use leverage to earn that 8% on $400 worth of rkuSOL when you only start with $100. And so in order for the economics of that to work, of course, your borrow rate has to be lower than the yield that you're getting on the borrowed rkuSOL. And so the way it works is when you deposit your initial collateral under the hood, it's basically a flash loan to borrow against that, buy more, and then use that to effectively deposit more collateral. And so now you just have all this collateral, a portion of which you've kind of deposited using borrowed funds after swapping it, and then you're earning yield on that full piece. And then when you go to repay, we take everything but the yield that you got on that additional $300 of collateral, swap that, use that to repay the loan, and now you can take the yield from all $400 and the original deposit of $100, and you've made yield on that full kind of base. And the reason that is like obviously leverage does not come without risks, and especially if you're doing an asset that's like some tokenized asset that like the NAV can go down, or there's some other risk where you might be at risk of liquidation or like a price haircut and your original deposit is worth less. What's interesting about an LST loop is you're borrowing SOL to swap to that LST, and your liquidation price is dependent on the price of the LST relative to this borrowed asset. So the LST relative to the SOL. So the odds that those two things diverge is slim to none, especially with LSTs that are like using the Solana program or Sanctum or something like that. And so you benefit from the fact that the only real like liquidation scenario is if like the interest rate goes up some crazy amount. And so on top of that, if you're using a platform like Loopscale where you have a fixed rate and predictability around the rates, you can also minimize your risk of like an interest rate related liquidation. And so what's again cool for especially something like rkuSOL is, and for like Raikou, is being able to kind of bootstrap. So say there's like $1 million worth of initial deposits or supporters of rkuSOL that want to see the protocol grow. You're effectively taking that interest and using leverage to multiply that, and all those folks can take whatever initial capital, and not only are they earning more, but they're growing the LST itself. And of course, especially in the context of an LST, like helping support the network and secure the network is kind of obviously an added benefit, probably the most important benefit if take a step back, but the yield is nice too.
Yeah. So just to clarify for the users, basically what's happening behind the scenes is, you know, if you have some rkuSOL, and I think the rate on that right now is like 5.8% ish. You know, you deposit that, you know, you want your 5.8% yield. Then you borrow non-stake SOL against that. Maybe you're paying like let's say 3-4% interest rate. You take the SOL that you borrowed, then put that into rkuSOL, and you may be paying like 4% interest rate, but that extra 1.8% you're still earning that, and you kind of loop that multiple times. This all happens behind the scene, just like with one click. So you just get to like earn
Exactly.
extra money. Cool. Yeah.
Exactly. And I think it seems like and it's interesting because EVM, it's mostly manual looping. Like people do this process on their own, but I do think it makes a big difference to have it be one. It's crazy to me that EVM does primarily operate that way, because I do think there is like a huge benefit in being able to one click deposit for those yield products. And granted, I do think there is like more retail users on Solana relative to ETH. And so maybe like ETH with their like whales, people are more willing to go through all these steps. But I do think it was a huge unlock for us versus like tweeting like, here's one strategy you can do, like deposit this, borrow this, buy this, deposit this, borrow this, buy this. And just being able to just package it all up.
Yeah, I remember.
Sorry, go Nate.
Sorry, I was just going to talk about my Polygon DeFi days. It's actually one of my first interactions ever with DeFi. Was when Polygon first showed up on the scene. It was like the only quote unquote Ethereum L2 at the time, and everyone was so excited about the cheap fees. Aave just started a campaign of like, I think it was Matic token at the time. They were like doing a campaign where if you deposited tokens on Polygon into Aave, you got Matic rewards. And so I farmed the hell out of that. I was depositing, borrowing, which was looping. And it was one of the first really cool DeFi interactions I had, where I was making a decent amount of token rewards just by looping my deposits over and over. But it was a pain in the ass.
Yield farming in 2021.
Oh, the APYs. I wish we could go back.
They were actually, it's just crazy to think about.
I miss the days of like seeing like numbers bigger than would fit on the screen, where you just get like literal like overflows on the website, and you're like, okay, the race is like, or the bet is like, am I going to sell before other people start selling their rewards versus restaking them? And it was just a game of chicken, basically. But
yeah, maybe one day we'll get back to those APYs, but people can't hold tokens for more than 5 days at a time nowadays. So
5 days, 5 days. Where are you
that's
finding
actually a
people
long
holding stuff for
time.
5 days? Yeah, geez.
that's actually really long. I think the average hold time is what, 10 seconds?
I don't even know at this point, dude. But we are coming up on time. Mary, is there anything that you would like to like chill? Chill Loopscale. Where do we find you? Where do we find Loopscale? What should the listeners be doing here?
Yeah, I mean, would love to show kind of, especially since I didn't get a chance to talk about it too much, but our Earn Vaults, which is kind of the first like new primitive or like real product, a brand new product we've launched since our original launch. And the goal of the Earn Vaults is kind of all encompassing. It's like a superset of the loops, and it is enabling again like these and saying like, people are interested in an asset only if they can get the optimized yield profile on an asset, and it involves, and even like loops, you have to consider entry price and exit price and things like that. And so Earn Vaults wrap not only looping strategies, but kind of the optimal strategy across multiple venues, including Loopscale, to deliver like the best yield for a particular asset or for a particular exposure. And I think it's also especially interesting for issuers in terms of, again, this idea of like, how do you enable like maximal DeFi composability and utility in order to grow your asset? The Earn Vaults are super interesting because you can have like a single entry point for users that enables basically all of these different things that are required for an asset to grow, whether that's like, so we can deploy in like Orca, AMM Markets, and Market Make and have a yield strategy in the same vault that is lending capital against that asset, in the same vault that is looping that asset. And you are taking kind of all the different functions you need and creating a single entry point and having a curator effectively kind of manage the capital across those different like use cases that are required for the asset to grow.
So you're managing all the fancy complex stuff so that the rest of us don't have to click a billion different buttons.
Yes, that is the goal. And so we just launched our first vault 2 weeks ago, and I think it's already at like $7.5 million in deposit. That's the Henri Growth Vault. And we've got quite a few more lined up here. And I think one that will also feature rkuSOL. So should be exciting.
Awesome. Well, definitely looking forward to that. Purely personal curiosity, is that something that like you guys offer is like that can be integrated into other apps? I mean, I'm obviously like I'm sure you have an IDL and everything on chain, but is there
Yeah,
plans?
sorry,
So
like describe what you mean, like the depositing to the vault or like the deployments, like how the capital gets allocated.
just like depositing into the vault. I guess like the thing that like I'm interested in is like how do we make crypto look more and function more like traditional finance, where it's like instead of a whole bunch of apps, where it's like there can be one place that users go and are like, okay, you know, the backend can be Loopscale and you know, right now I'm still going to come up with other examples, but you know, like how does essentially like a bank app run on crypto? You know, like is this something that you're also looking for developers to integrate with, or is this
Yeah, for sure. I think like we've got, I don't know if we have the API documentation and program documentation for Earn Vaults quite yet, but we do have it for the Lend Vaults. And we're definitely excited about different use cases that enable, like passive deposits into these vaults. And our goal is to kind of be a liquidity network. And I think, the places where the kind of network gets fed and the different nodes in the perfect end state are coming from all sorts of places, and just kind of operate on, again, a shared ledger, shared liquidity.
Awesome. Well, we are at time, but Mary, this was a fantastic conversation. Really enjoyed this with you. And thank you for taking the hour to come and yap with us on the Solana Circuit. And all the best with your yield vaults. Hope to see rkuSOL there. And if you have not done so yet and you are an rkuSOL holder, go to Loopscale and loop your rkuSOL. Well, not financial advice, but that is a thing you can do.
it is a thing you can do, and you may or may not be able to, you may or may not be happy that you did so. So, yes, I think that's all we're allowed to say. Otherwise, Charlie will yell at me. Charlie being our head of legal. But yeah, thank you so much, Mary. I really appreciate it. This is a great conversation. Sorry for derailing it into like investment banking stuff, but
No, this was so fun. Thank you so much for having me on.
absolutely. All
All
right,
right.
and for everybody else, make sure to join us on Friday. We will have our town hall as normal, except we are bringing Robin back on. That is our founder and CEO. So you know he's always got fun stuff to say. So make sure you guys tune in for that, and we will see you on Friday.
Peace out, everyone.